Hello and welcome to TA for Traders. It's Wednesday the 26th of April and I'm Nigel Croft. In this short video we'll be looking at the charts of two Asian indices, the Japanese Nikkei-225 and the Shanghai Composite. Now, even though geographically they're in a similar region, the performance has been dramatically different. Over the last 6 or 7 days we've seen a big rise in the Nikkei. That's taken it up to key resistance levels, whilst on the Shanghai the government there is trying to cut out speculation. The market has come back and it's now at a critical support level. This is the daily on the Nikkei, and you can see the rally that we've had over the last 6 days. So let me turn off the cursor, and you can see that it's taken us back above the 20-day moving average, the yellow line, and now back above the 50-day moving average, which is tracking down. Which was a negative influence, did hold the market up a bit yesterday, but it closed above, and then we've had a follow through today. The market, however, is into this band of resistance. It's actually, this chart is so similar to the oil price when I did a video on the 11th of April. I've just done another video on the oil price that you can see on YouTube. Do look at the 11th of April and you'll see a very similar picture to what we're having here. Now, on the 11th of April, that was actually the peak in the oil price. It then came off and is now testing its 200-day moving average. So what I said on the 11th of April on that video is going to be very similar to this video. The Nikkei is bouncing into this area of resistance. Now, this resistance has got lots of resistance points, and these all date back from December all the way through to March this year. And there's 1, 2, 3, 4, 5, 6, 7, 8, 9, probably 12, 15 resistance levels that need to be broken. If the market goes sideways, what you'll see is this 20-day moving average will soon turn around. The 50-day will flatten. If they then cross and they're both moving upwards, that's a very bullish sign technically, and that could give the push to break this resistance. At the moment, the RSI is showing positive momentum. It's gone back above 50 at 61, and the MACD have just started to shout a buy signal with the short term above the long term. So they're good. They're showing positive momentum. Looking at the weekly, and again you can see that we're into this resistance. We're up against the sideways moving 20-week moving average, although we are slightly above that at the moment. Here the momentum's not quite as positive. It's good that we're above 50 on the RSI. It's at 57.41, but we're still in a downtrend on that indicator. Likewise, the MACD not quite as positive. Short term still below the long term, although there is a narrowing of that differential. Looking at the short term, this is a 4 hour, so each candle here represents 4 hours, and to me we're slightly overextended away from the 24-hour moving average and the 54-hour moving average. Although I will say it was positive that when they crossed, they were both moving up. So some kind of consolidation, maybe back down towards 19.1 would be natural. RSI did go slightly overbought, has come back, is now still at 76, and MACD as well slightly overbought, and they're diverging there. Looking at the support resistance levels on the Nikkei, and I've picked out 2 of the key resistance levels, although as I've mentioned that there's multiples. That's 19706.5 and then 19717, with the supports at the 50-day 19142.8 and then at the second support level at the 20-day 18847.67. Right, moving on to the Shanghai Composite, and here you can see that the last 10 days trading has been completely divergent from the Nikkei. Here we were at a resistance level, and you'll see it was a key resistance level, and we've come off, and now we're testing the 200-day moving average, which is this red line. And also you can see, or I hope you can see, that I've drawn a trend line that goes through the low here on the 27th of September, then on the low of the 16th of January, and as you can see, on Monday we did touch this trend line and then bounced up, and we're now back above the 200-day moving average. These are critical supports. Let's look at the longer term picture, and you can see what I was saying about the resistance that was hit being critical. If we'd managed to break through that, this market could have had a big run. I know I've talked in previous videos looking back at what happened in 2014, and when the market broke there was an enormous surge upwards. I had been indicating that might be the case if we did break up. Anyway, we haven't broken up. As I said, there's that key support line that we're now trading on, and here you can see also the 50-week moving average, which is at 3092.74. That is a key support level. If we break these supports, the moving averages would roll down, and you would expect then that these supports around the 2800 level to be tested. In the short term, looking at the 4-hour chart, you can see that all the moving averages are tracking downwards. The 20-day crossed the 50-day tracking down, bearish sign. 20-day crossed the 200 4-hour tracking down. Sorry, these are 20 and 50 4-hour moving averages, not dailies. I keep getting confused. So they're all bearish signs. We are slightly oversold. We've also had a double bottom on the RSI. Keep your eye on that. That could be interesting. Perhaps we could have a bounce up to the 24-hour, which would be 31.85. MACD are converging. So there is potential signs that we are finding a base here, which obviously on the daily would be the 200-day moving average. Looking at the key support resistance levels, as I've said, the 200 days the key, 31.32.99, with the support below there 3111.21, with the resistance at 31.80.8, and then at the downtrend in 20-day 32.22.94. So that's been TA for traders looking at the Nikkei and the Shanghai Composite, one into resistance and one back to support. Thanks for watching this video. If you go onto bulletin boards and you put messages on there and they're related to Nikkei and the Shanghai Composite, please do post this video into that bulletin board. Let's get the word out there about TA for traders. Thanks for watching this video right to the end. Please do remember that I look at the charts and these are my opinions only, and they're for education purposes, and in no way are they meant as an investment recommendation. Please do read the disclaimer.